Welcome back to ProcessCast with Mark Anderson and Samantha Blake. Your go-to podcast for insights into business process management and the technologies transforming the way we work.
Ever look at the market and just kind of wonder, like, where are those opportunities, those pockets of growth that maybe everyone else is missing?
You know, it's funny you should say that because that is like the million-dollar question for so many businesses, isn't it?
It really is. And so what we want to try to do today is kind of get into the tools and the approaches that experts use to really analyze markets and pinpoint where those areas of opportunity might lie.
I think it's a great idea. And what's interesting about it is that there isn't a single right answer. It depends on what you're trying to do and what kind of business you are. So that's what we're going to dive into today.
Okay, sounds good. So let's just jump right in. One of the places we wanted to start was with Bain Company, and they have this really strong data-centric kind of perspective on how to approach this.
Yeah, and they really emphasize this idea that you have to move beyond just gut instinct or intuition. You really need to ground your strategy and decisions in hard numbers.
And they've really put their money where their mouth is. They've developed this whole suite of software solutions, a lot of them based on AI.
Yeah, it's impressive. And this is really designed to bring that data-driven rigor to how you go to market, how you approach sales and marketing, how you think about new opportunities.
And they really highlight how they combine that deep industry knowledge with sophisticated analytics and, proprietary data sets that they have access to.
Yeah, so they offer a whole range of solutions, everything from sort of basic diagnostics and benchmarking to things like data as a service DaaS or software as a service SaaS, which is essentially providing, those data and software applications on demand as you need them.
Yeah, that's super interesting. And when we get into the specifics of sales and marketing, one of their tools that jumped out at us was MoneyMap, and it's all about visualizing data in a way that reveals those opportunities that maybe you're not seeing.
Yeah. So you can think about it as identifying opportunities for upselling to your existing customers, maybe cross-selling them some related products, or even identifying entirely new segments that you could be targeting.
Right.
It really is about looking at your go-to-market strategy and your sales pipeline with a fresh perspective.
I love that. Yeah. And they make the point that the real value of that is not just seeing the data, but it's seeing it in a way that highlights exactly where you can get that next dollar of revenue.
Exactly. And it allows you to shift from being reactive to being proactive in terms of your growth strategy.
And one of the other tools they mentioned was ProfitCube. And this one really takes this granular look at profitability, not just overall, but across multiple dimensions.
Right. So it's multidimensional profitability analysis. And, imagine being able to see the profitability, not just across your entire business, but also, broken down by specific products or customer segments or even sales channels.
Yeah, it's kind of like shining a light on those hidden pockets of maybe high profitability or areas where you're surprisingly low on the profit margin.
Exactly. And that can really help you identify opportunities either for efficiency or maybe even for developing entirely new offerings.
Fascinating. So moving beyond just the core sales and marketing functions, Bain also offers tools that are targeted specifically at private equity.
Yeah. So, for example, they have Helix, which is a platform that provides intelligence on private markets.
Okay.
And it helps firms identify and evaluate potential investment opportunities.
Right.
And then they have Piscatus, which is another really interesting one because it uses AI to analyze massive amounts of consumer data.
Wow.
To uncover market trends and identify, potentially lucrative areas for investment.
So it's not just about, businesses growing their existing operations, but it's also about, investors using these tools to find those promising new ventures.
Absolutely. It just shows you how broad the applications of market analysis are today.
Yeah, that makes sense. And then even within specific industries, they have these tailored tools.
Yeah, they have things like Lumi for the telecom sector, which focuses on really, really hyperlocal insights, getting down to the neighborhood level.
Yeah.
And then they have Vantage for the retail industry, which is all about location intelligence and optimizing, the physical presence of stores.
So they've really thought about how to tailor these data tools to the specific needs of different types of businesses.
Right. And that makes sense because the factors that drive success in one industry might be completely different in another.
Right. So it's not just a one-size-fits-all approach. It's really about, choosing the right tools for the right job.
Absolutely.
So Bain very data-centric, lots of specific software tools. But now let's shift gears a little bit and look at Deloitte and their take on this, which focuses on this idea of adjacent growth.
So adjacent growth, it's an interesting concept. It's really about, how can you leverage your existing assets and capabilities to find new avenues for expansion? And the key is that you're not making this huge leap into a completely unfamiliar market. You're looking for opportunities that are closely related to what you already do well.
Right. So it's kind of like, you're good at this, and what else could you do that's similar or related that you could also potentially be good at?
Exactly. And the beauty of this approach is that it significantly reduces risk because you're building on your existing strengths and knowledge.
It's not just about, randomly expanding. It's about being very strategic and deliberate about where you choose to grow.
Precisely. And Deloitte really stresses the importance of starting with a very clear adjacency growth target. And this is a goal for your expansion efforts that takes into account both your internal capabilities and the external market opportunities that are available.
And they also talk about the importance of having a scalable and repeatable process for managing these growth initiatives.
Yeah, so it's not about just, trying something once and seeing if it works. It's about building a system that you can use to continuously explore and capitalize on these adjacent growth opportunities.
And they have a great case study of a South African retailer that was really looking to use their existing retail network to find growth in, adjacent areas that weren't their core business.
Yeah, so what they did was they followed this 4-step process. And it started with identifying market gaps. So they looked at the overall market size, and they saw that there was actually a significant opportunity for growth with relatively low market penetration. They also mapped their existing customer base, and they found potential gaps for new products or services that they could offer through their current store locations.
Right.
And then they looked at other retailers internationally that had successfully diversified in similar ways to see what lessons they could learn.
So it was kind of like benchmarking themselves against others who had already done it.
Exactly. And one of the key takeaways was the importance of leveraging your brand to market new products to your existing customer base. They also saw the value of utilizing existing channels like online platforms and call centers rather than immediately investing in a lot of new physical infrastructure.
So it's about being smart about how you use those resources.
Exactly. They also found that having a strong customer loyalty program was a huge advantage.
And they had that in place already, right?
They did. And it allowed them to both, drive adoption of these new offerings and gather valuable customer feedback.
So in that second step, once they kind of figured out where those market gaps were, they moved on to assessing their own assets.
Right. So they took stock of what they already had in place, and they had a really strong foundation to build on.
Like what kinds of things?
So they had a really powerful brand, a large geographical footprint with their retail stores, which gave them a low-cost way to distribute new offerings. They had existing marketing channels they could leverage. They had a fully functional call center, a large and loyal customer base, a successful customer loyalty program, and a really strong cash flow situation.
That's a lot to work with.
It is. It's a great starting point. And then in the subsequent steps, they moved on to actually identifying and confirming the most promising opportunities.
So how did they do that?
They used all those insights from their market analysis and their asset assessment to generate ideas for potential growth initiatives. And then they put those ideas through a rigorous process to make sure that only the most viable ones move forward.
What kind of process?
It's called a stage gate process, and you can think of it as a series of checkpoints where each idea has to meet certain criteria in order to advance to the next stage.
Makes sense.
And for the ideas that made it through, they developed detailed value propositions, really outlining the benefits to customers. And they did a very thorough risk and return analysis to pinpoint the most promising prospects.
So Deloitte's approach is really about being smart and strategic, about expanding into those areas that are closely related to your core business.
Absolutely. It's about finding that sweet spot where you can minimize risk by capitalizing on your strengths and leveraging your existing resources.
It's that balancing act of managing the business of today while you're also building for the business of tomorrow.
Exactly.
All right, so let's move on now to BCG, the Boston Consulting Group, and their demand-centric growth approach, DCG.
So DCG is really about going deep. Like really deep into understanding why customers choose what they choose.
So it's not just about what they buy, but the why behind the buy.
Exactly. It's about mapping the entire market demand landscape based on those underlying needs in order to actually predict the choices that consumers will make.
So it's about understanding those individual motivations that drive purchasing decisions.
And to do this, they look at a really wide range of factors. Everything from demographics to the context of the purchase to psychological factors, even emotional needs.
Wow, so it's really a holistic view of the consumer.
It is. They leave no stone unturned. And a key point that they make is that DCG maps choices, not consumers.
What does that mean?
It means that they recognize that a single person can have different needs and make different choices depending on the specific situation they're in.
So I might buy something different for lunch than I would for a romantic dinner.
Exactly. It's all about context, and DCG acknowledges that, and they build what they call a demand map that visualizes these different demand spaces based on those varying needs.
So it's a much more granular view of the market than just traditional segmentation.
Right, and they point out a number of key differences between DCG and those traditional approaches.
What are some of those key differences?
So traditional segmentation tends to group consumers based on broad characteristics like age or income. DCG segments based on actual demand, those underlying needs. Traditional methods also look at a fairly narrow set of competitors. DCG looks at the full range of alternatives that a consumer might choose from, and they also tend to rely on consumers' memories of past purchases. DCG focuses on the most recent consumption experience to really zero in on those key drivers.
It's really about getting to the heart of what's influencing those decisions right now.
Absolutely.
So how do they actually go about implementing this DCG methodology?
It's a two-pronged approach. They start with in-depth qualitative research using their proprietary mind discovery approach. And this involves psychological techniques to really dig into those dimensions that influence choice.
Oh, okay.
And then they follow that up with large-scale quantitative surveys.
To validate the qualitative finding.
Exactly. And in these surveys, they focus on a few key things. They look at the moment of choice. So they ask consumers about recent purchases rather than general preferences.
Makes sense.
They use a technique called consumer trade-offs, or MACSDIF, where they force consumers to make choices between different attributes to understand their priorities.
Oh, interesting.
They also test a wide array of dimensions without prejudging what might be important, and they use statistical analysis to identify those true drivers of choice. And they also look at in-market performance to understand how big those different demand spaces are and to calibrate their survey findings with actual sales data.
So they're not just relying on what people say, they're also looking at what they actually do.
Exactly. And finally, they assess the brand's starting point. You know how well consumers perceive the brand as meeting their needs within each demand space?
They have a really compelling case study with Arby's that shows how DCG can lead to a real turnaround.
Yeah, Arby's was struggling with relevance and declining sales, and they weren't really sure who their true competitors were.
So what did the DCG analysis reveal?
It showed that they were actually competing in a much broader landscape than they thought, including things like deli sandwiches, and that there was this big unmet demand space for freshly prepared food that really hits the spot. And the analysis showed that Arby's actually had a strong potential to succeed in that space. They had a right to win, as they call it.
And they used those insights to really revamp their entire strategy.
And they repositioned the brand, changed the menu, updated their marketing, developed new products, even redesigned their restaurants, all with this emphasis on fresh preparation.
And it worked?
It did. They saw 5 years of consecutive same-store sales growth after a period of decline.
That's amazing. So BCG really emphasizes that this demand map then becomes a really valuable tool for all sorts of strategic decisions within a company.
Absolutely. It helps you identify those white space opportunities, those unmet needs that can guide your innovation efforts. It helps you understand the role of each brand in your portfolio. It makes sure that your marketing and product development and everything is aligned with those fundamental consumer needs.
So stage one is really about building that comprehensive map, and then stage two is taking those insights and turning them into action.
Right. So stage one is defining the competitive landscape correctly, and then building that map with all the needs and boundaries and data. And then stage two is using that map to figure out where to play, how to win, and whether you have the ability to win.
And they have examples of how companies like Frito-Lay and a global food and beverage company have used DCG to drive significant growth.
Yeah, Frito-Lay was able to really refine their brand portfolio investments based on these very specific demand spaces. And the global food and beverage company realigned their entire brand and portfolio strategies, which led to double-digit growth.
That's really impressive. And finally, BCG offers 5 tests that, listeners can use to see if this approach might be right for them.
Yeah, so can you clearly explain why consumers choose your brand over others? Is your market changing rapidly? Are you seeing cannibalization between your own products? Are your teams working at cross purposes? And is your growth slowing down?
Those are all great questions to ask.
If you answer yes to any of those, it might be time to consider a demand-centric approach.
Okay, so DCG really emphasizes that deep dive into understanding why consumers make the choices they do.
It's about moving beyond the surface level to uncover those fundamental needs that are driving demand.
Now let's turn our attention to KPMG and their perspective on growth and market entry strategy.
So KPMG takes a very structured and methodical approach to growth. And they recognize that there are certain triggers that can make you reevaluate your growth strategy.
Like what kind of triggers?
Things like market saturation, increased competition shifts in demographics, or customer needs difficulties with innovation, a change in leadership, high cash flow with no clear direction, or just a general lack of commitment to growth.
It sounds like a lot of companies might be facing at least one of those triggers right now.
Probably, and they also have this interesting 9 levels of value framework.
What is that?
It's essentially a comprehensive way of looking at your business across its financial operations and overall operating model.
So it's kind of like a lens to help you identify areas for improvement and growth.
Exactly. And they have this 4-phase approach to developing a growth strategy.
What are those phases?
It starts with a baseline assessment where they evaluate your financial goals, your growth aspirations, your internal capabilities, and the external market. And they formulate initial hypotheses about growth areas. Then they move on to prioritize growth opportunities, where they do a high-level prioritization based on the size of the prize and alignment with your objectives. Then they develop specific growth streams, where they analyze those opportunities in more detail based on attractiveness and your ability to win. And then finally, there's the implementation planning phase, where they create a roadmap and action plan.
It sounds very thorough.
It is. They really emphasize making sure that the strategies are actionable and that there's buy-in from everyone involved.
And they highlight some of the key benefits of their approach.
Yeah. Things like actually being able to implement the strategies, building momentum, aligning stakeholders, maintaining a focus on value, and managing risks through scenario planning.
And they have a section called What's in the Box.
All right, so this is where they outline their expertise and the key questions they can help companies address. Things like accessing new revenue, entering new markets, commercializing innovation, and building customer loyalty.
So they have experience across a wide range of challenges.
They do, and they also refer to this market products matrix as a helpful framework.
What is that?
It's a visual representation of different growth strategies based on existing and new markets and existing and new products.
Okay.
So you have things like increased penetration, where you sell more of the same products to the same customers, market development, where you take your existing products to new customers, market entry, where you introduce your products to entirely new markets, market expansion, where you introduce new products to new markets and product development, where you create new products for your existing customers.
So it's a way of mapping out all those different possibilities.
Exactly. And they also share some examples of their recent work with companies in different sectors. Insurance, industrial manufacturing, particularly in the electric vehicle space, and life sciences, specifically around elderly care and extending the life cycle of existing products.
So they've really applied this framework across a variety of industries.
They have, which shows its versatility.
So to recap, we've looked at Bain's data-driven solutions, Deloitte's adjacent growth strategy, BCG's demand-centric growth, and KPMG's structured approach to growth and market entry.
We've covered a lot of ground.
We have, and it seems like effective market analysis really comes down to understanding both the what and the why.
The what being the data and the trends, and the why being the underlying consumer needs and the strategic fit.
Exactly. So I guess the takeaway for our listeners is to really think about which of these approaches might be most relevant to their situation.
And to remember that these aren't mutually exclusive. You can combine elements of different approaches to create something that really works for you.
Right. So with all of this in mind, what hidden opportunities might you now be able to uncover?
It's time to take these insights and start applying them to your own market analysis.
I think that's a great place to leave it. Thanks for joining me today.
It's been a pleasure.
And to all of you listening out there, dig in and keep exploring those opportunities that are out there.
Happy hunting.
We'll see you next time.
Bye for now.
for listening to ProcessCast. This episode was brought to you by Heflo, the BPM platform that empowers businesses to document, automate, and optimize their processes with AI. Experience the intelligence to simplify complex business processes and accelerate your growth with our complete management solution. Visit heflo.com to learn more. Be sure to follow ProcessCast for more insights on business process management, and don't forget to share this episode with your network. Until next time.